Thanks very much. Thanks, Jerry, as usual. And thanks for your time this morning to tell you about Cassini. We're at quite an interesting stage of our development, and we think there's some exciting stuff coming up over the next few months. Just a disclaimer, so this presentation was actually lodged on the ASX platform this morning for those who would like to view it in more detail. So a little bit about us. We listed in 2012. We've got a relatively tight capital structure with 276 million shares on issue. Our share price has sort of performed relatively well against the ASX Small Resources Index. You can see here in sort of that May-June period that Rob Murdoch was referring to before at the end of the year. And so we've performed quite well, a bit of a flat spot, and we're starting to perform a little bit better again. Major shareholders, Macca Mining Services and GR Engineering, both are providers in the mining services space, and came on board about 2 years ago on the strength of this project, looking to develop a relationship going forwards. So who are we? As Jerry said, we own probably the largest undeveloped nickel and copper mine in Australia. It's a sulphide, which is an important differentiation. About 12 months ago, we did a joint venture earn-in deal with Oz Minerals to help us develop this asset through the low point of the commodity price cycle. Our strategy in terms of value creation for our shareholders is to own 30% of a producing mine, very similar to the independence model at Tropicana, and that process is well underway. We believe, will provide us cash back into the company to reward shareholders, but also to allow us to continue to explore and develop a number of projects that we've got that can add value. We temper that medium-term strategy with some shorter-term goals because they're important as well. It gives our shareholders exposure to some exploration upside and the discovery opportunity. And those drivers over the next few months are really the Stage 2 funding decision from Oz later this year. We've got some other projects that we're going to do some exploration work on in gold and zinc, both excellent commodities to be exploring for at this time. And we are seeing an increase in the base metal prices. The conversation around copper is very strong, and nickel is also starting to show some positive moves for a number of reasons. So we see that it is actually an excellent time to be developing some of these large projects, develop them during the low point of the price cycle so that you're well positioned to take advantage of the price increases over the coming years. So a little bit of our project portfolio. Our primary portfolio project is the West Musgrave project. As you can see, we like to refer to our projects as centrally located in Western Australia. The first response that a lot of people have is, gee, that's remote, and they are relatively remote, but all that really does for us is provide some economic challenges, and we've now done enough work on the economics, on the logistic costs and on the power to realise that they don't provide a material disadvantage to the project. So there's some infrastructure out there already. We don't need to build rail. We're not carting a bulk commodity. We're carting a high-value nickel and copper concentrate. And we know the numbers work. So just to give you some sense of the scale, within the Nebo and Babel deposits there's about 30,000 tonnes of contained nickel and about 850,000 tonnes of contained copper. These are significant, large-scale deposits. They're close to surface, which is one of the advantages, so open pittable. And from the scoping study work we've done before, we know that we've got a long mine life, low C1 cash cost operation. And so from a strategic point of view, to have those metrics in a project allow you to take advantage of the commodity cycle as it goes up and down. We also have another deposit in this area, so it really is a mining camp that we're talking about. It's in an inferred stage. We released this in the end of 2015, 930,000 tonnes of contained copper in a resource of about 156 million tonnes. Once again, shallow copper mineralisation. And the interesting thing about this project, there's significant upside yet in terms of exploration. So we acquired this project from BHP in 2014. BHP spent significant amount of money going through the project area and there's a number of opportunities that require follow-up that we are in the process of doing and will do over the next sort of 24 months. Apart from the West Musgrave, we've also got the Mount Squires, which is a gold project with some historical drilling, shallow gold mineralisation. As Rob was talking about before, when our exploration strategy is to find these large-scale opportunities, and they are in the undercover regions and in the more remote parts of Australia. So that project has got a 50-kilometre sort of structural trend that we've been working on and will continue to do some work on over the next 12 months. We also have a sedimentary zinc project. That's an early-stage exploration project up near Lake Mackay. So there's a fair bit of activity just in the Tanami, just to the east of that. And that's something that we're progressing as well. So I think there's plenty of slides around about the nickel market, but I think the narrative that's really starting to get hold is that nickels ain't nickels. So there's different types of nickel, and as also Rob mentioned this morning, there's a new market for nickel. So from a supply side, there's been some mine closures, and we've just seen Ravensthorpe close. Probably only 50% of the current nickel supply is suitable for some of this new nickel market, which are around the battery market and the EV and renewables. Nickel pig iron from Indonesia and the Philippines can't supply that part of the market. So you're really looking at from a demand side in that renewable space, there's only a certain number of mines that will be able to provide the type of product that's required to meet that demand. So there is continued growth in stainless steel, which is traditionally what nickel's been used for. There's this new battery demand, and UBS have started to put some numbers around that. So a report they released in July showed that they expect that battery demand to increase between about sort of 15 and 40% of the existing nickel market. So it's between about 300 and 900,000 tonnes per annum of nickel metal through to 2025. So significant increase in that market, and it can only be met really by 50% of the suppliers. So the nickel price has performed relatively well since a low of sort of February last year, and all forecasts are that it will continue to increase and really increase more strongly from sort of 2020 and above and beyond, and that's really about the time that we'll be looking to get into production. The copper market, just to mention briefly, I think that everyone's very comfortable with the strong fundamentals of the copper market. All the majors are really looking for good quality, large-scale copper projects. There's a significant demand driven by electric vehicles. I'm not sure you've seen some of the numbers around the kilograms of copper in EVs, so 80 kilograms of copper in some of these new EVs. Not only the vehicles themselves, but the distribution and transmission infrastructure that's required to deliver charge to these vehicles. So really the growth metrics around the copper market are very strong. So just a little bit about the project. This whole tenement package is about 2,500 square kilometres, just to give you some context. So it's a large area that we have. These are our two most advanced deposits. So Nebo and Babel are about 1 kilometre apart. They were discovered by Western Mining back in about May 2000. About 15 kilometres up the road, we've also delineated the Succoth copper deposit. We've identified mineralisation along a 40-kilometre trend. Late last year, we drilled some holes at this southwestern end at One Tree Hill. Some good numbers, 34 metres at 1% copper. And then at the other end, we've also had a number of mineralised hits with nickel and copper and PGE mineralisation. We know we're in a mining camp. We believe there's significant upside for further discovery. Really, the key to this project is to get the first operations up and running, and that's what we're working through with Oz Minerals. So we know if we get, if we get the infrastructure going and get the production up at Nebo and Babel, then really the opportunity is you've got a very low capital intensive copper project that will extend that mine life by probably another sort of 10 to 20 years. We inherited a fair bit of infrastructure out there, so this is our current exploration camp. BHP set up operations out there. At one point the camp had about 80 people in it. As I said, they've spent a significant amount of time and money out there over the last sort of 10 years. We've got excellent community support. The locals out there are very keen to get something up into production. There's a good quality road, so that's the Central Highway just out of Warburton. So although it's remote, as I said, it doesn't present any technical challenges. It's a good quality road. We're trucking a high value concentrate, and we know that the economic metrics on the project are pretty robust. That's just to give you some idea about the scale of the project. You can see that it really does sit up there well with Mount Keith and Leinster. All these other projects are owned by large, multinationals. So little Cassini, you can see why at a point of the low nickel price, it was beneficial for us to find a strong partner in Oz Minerals to help us develop this project. So just a little bit about the JV. Oz Minerals, most of you are probably aware of them, a large copper producer, very strong balance sheet. At the end of the quarter, they had $625 million in cash and no debt. Strong cash flows out of Prominent Hill, just to prove the development of their Carrapateena mine. So we've got a 3-stage project with them. Some of the keys are that Cassini is the operator in the initial stages, which is important, keeps our cash requirement and a lot of keeps our costs down and allows us to preserve our capital structure. So stage 1, which is where we're currently at, it's just coming to an end with Oz Minerals who will be in a position to make a decision by the end of the year. We then go into stage 2. Stage 2 is a bit more meaningful, so they're required to contribute $19 million in a maximum of 18 months. Once again, we're the operator. The great thing about this is that there'll be money for development, but also money for exploration. So in that period, there'll be $4 million spent on regional exploration, so exploration outside the mining lease, and that will really drive the value opportunity for the project, but also news flow with the opportunity of finding more resources out there. At the end of that stage 2, they earn their first equity interest of 51% and then progress to stage 3, which is the final sort of DFS stage. Another $10 million towards making sure that we complete the DFS and an additional $4 million on exploration. Cassini's free carry through to the end of the DFS. We remain the operator for the first 2 stages, and we're looking forward to we've had a great working relationship with Oz Minerals. They've been excellent to work with. The project is progressing really well, and we're very confident that they'll push through their decision at the end of the year. A little bit about the work that's been done. It's really been around just increasing the confidence around the metallurgy. When we did our original scoping study in April 15, we were very cognizant of the capital expenditure required at the back end, so we looked at a staged model. This exercise has been around looking to find what is the optimal size of a processing plant. We believe it'll be a minimum of 4 million tonnes per annum, but likely a bit bigger. And the important, with looking at a larger scale, was making sure that the met work hung together at a lower throughput grade. Just to give you some idea, 200 float tests on 17 different ore types is more than Nova had done at the end of their DFS. So we've taken a very conservative approach to this, and we've been very thorough with the metallurgy, because if the metallurgy isn't right, obviously that is one of the key technical risks of the project. And it's now at the point where we're very comfortable about how all those different ore types perform. The other key technical risk was around water. We'd originally allowed to pump it from a long way away, 130 k's away, but we now know we've got enough water on project to provide for processing, and that's significantly de-risked the water supply to the project, which is important. We've also updated our energy studies and looked at conventional diesel. There's a great opportunity for some hybrid and renewable energy out there. There's an excellent wind resource and a solar resource, as you'd expect in the middle of Australia, and really that will push forward into the PFS. We've done a lot of work around the transport and logistics to understand our costs, and both with supply but also export of concentrate, and so we've done a lot of work around that and have reduced the costs compared to our previous studies. So all this sort of scoping study work will be complete over the next month or so. So the met work's done, we've updated the studies, the resource modelling is imminently finishing, and really what's starting now is the mine optimisation, then redoing that financial model. We hope that work will be done, as I said, by the end of September, beginning of October, and we'd be looking to release something sort of late October, November, and that will position Oz to be in a spot that they can make a decision in December. As I mentioned, the other thing that we want to do is continue with our goal of progressing our exploration projects. So this is the gold project that we have, which is adjacent to the West Musgrave. The technical guys have reinterpreted a lot of the data, and this is a 50-kilometre structural trend. There's been some drilling up here that we'll continue with, but really there's some structural targets that look very good, and that work will be done. We're hoping to get on the ground out there in the last quarter of this year. Also, the sedimentary zinc project. Once again, we did some early drilling, identified some good zinc anomalism, and we need a lot of follow-up work there. So just like you've seen, we've got a world-class nickel and copper project. We've recarried to a decision to mine via an earn-in with Oz Minerals, who have got significant financial capability. From the work we've done before, we know it's a strategic asset. It's long mine life, large scale, low cost. There's significant exploration upside within the portfolio, which will add further value, not only at the West Musgrave project, but with our other projects. And there's a re-rating opportunity as Oz decide to progress forward. I think that'll add certainty to the project and the funding, and we'll start to see some of that project value reflect back into our equity value. If anyone you want to come and talk to a happy geologist, we're at the booth. It's Greg Miles, our Technical Director. Please feel free to come and have a chat to he or I today. So thanks very much for your time.
Thank you, Richard.